Welcome back, everyone. Another edition of Buy or Sell What the Hell. This is August 4th, 2018. Alec, what's going on, partner? Just you and I today.
Not much, just watching the markets. I think Bitcoin's looking to break down below 7,000 again.
Yeah, it's Saturday, so if anybody's listening during the week here. Yeah, I mean, it seems like definitely this market gets pushed around on the weekends a lot easier than during the week, meaning by pushed around, I mean, we get these big moves over the weekend. So obviously, I think that has a lot to do with probably people just not being at work. So anyone in financial services that wants to take risk and play in this market probably isn't as active on Saturdays. So the market gets a little bit thin. You don't have the futures market open. I mean, this is a good example. So just to try to talk this through, if you can visualize, we've been talking about this pullback after this nice rally we had last week. That if you look at the 4 hour, there's a our pi line concept is down here around 7,000. We've been nibbling on this pullback, but we've really been kind of waiting for a retest of 6,800, which, if you remember, that was kind of the prior resistance that we had talked about that we finally broke through. And now we've pulled back to retest that. So what was resistance is now support. So this is kind of a logical place for the market to get back to. But, futures market's not open. So, we have a lot of guys that wanted to take advantage of buying more down here via futures, and that's something you can't do, which is so. I mean, I think the cash market gets pushed around a little bit on the weekends. What are your thoughts?
I don't know. Whatever the community or ecosystem chooses. I mean, they just pin it on a news item and usually just, go to the next one, depending what the price goes. Or, these news items change every few hours. It seems like there's some new narrative on why Bitcoin's heading this way or that way. But yeah, I
Yeah.
think so. That the volume's lighter on the weekends, and it's just
Well,
easier to push around by anyone, really.
and let's see. When did we start this move down this morning? What time? I mean, because you got Asia, which is obviously uh, much bigger flows than the West, right? I mean,
Mm-hmm.
they've been buying things. I mean, you've got cryptocurrency and McDonald's over there. You got people buying houses and cars with BTC, years and years ago. So they're way ahead of the West, but they're sleeping. So I think a lot of that demand comes in more on a Sunday. It'll be interesting to see if we do kind of rally back tomorrow.
Hey,
Um,
but we are catching up though now with the New York Stock Exchange. Now, what is it? Starbucks using their platform, their new announced platform, to offer Bitcoin payments for any sort of services.
yeah, yeah. Let's talk a little bit about that. Just to finish my point, I guess since I brought it up,
Yeah,
this move started this morning at looks like around 8 o'clock, just for the sake of stating that point. So I'm not surprised. We'll see if tomorrow markets start to open up on the Asian Open. That's kind of the flow I kind of care to see what happens. But
yeah,
we did nibble a little bit just to let people know here, kind of in front of 6,800. I
yeah.
kind of, but yeah, to that point, let's talk about that news. I mean, what kind of struck you the most about that?
I think it just takes one, domino, one of these big guys just to say yeah, and we're getting involved here. And then, after that announcement, right, there's got to be hundreds, if not thousands, of smaller companies, corporations, and institutions having that meeting, come Monday morning. What do we got to do? What's our plan going forward? How are we going to, stay up to date, with technology and the trends? And I think it
Hmm.
just forces everyone else to have a conversation when someone like that, actively is, beginning to participate in a real way with the,
Yeah,
digital assets and Bitcoin.
yeah, for sure. I mean, the exchanges are really kind of leading this push on the financial institutional side, right? I mean, CBOE and CME, that they're what they're trying to do. Some of these some of these players trying to get push these ETFs through, and then you have ICE, which is a big serious player, and as far as global exchanges go, I think it's really really positive for the space for them to kind of get the bigger picture, like we've been talking about on this podcast for 6 months ago, that that was the kind of the vision that we were saying. You don't really need to change the menu at Starbucks to be priced to Bitcoin. That's crazy. You're not going to see 8 decimal places. You know, that's what we've been saying, and that Bitcoin is not on the unit of account side, meaning it's not on the equation. If it's assets on one side, money is on the other side. When assets go up, purchasing power of the money goes down. When assets fall, the purchasing power of whatever is money goes up. Well, Bitcoin's on the asset side of the equation. We're still pricing Bitcoin in dollars. So we talked about, you just would be standing in line, and it makes more sense to say, hey, I want to sell some of my Dash here. I'm long a lot of Cardano. I'm going to hold that. My BNB coin has gone up a lot. Why don't I sell some of that, move it to dollars? I'll pay for my Starbucks. But if you can do that on their platform, I think that's kind of in line what we thought would make kind of sense to. Like, they even said this. It's kind of a stupid name, Backed. I mean, really, but BAKKT. Just for the listeners, that's what they decided to name this platform. But they have the right. I mean, they're saying it's to on ramp. This is quote what they're saying. It's backed as designed to serve as a scalable on ramp for institutional, merchant, and consumer participation in digital assets by promoting greater efficiency, security, and utility. I mean, I think that's perfect. That's exactly what we need. And the more you start putting, if you put that kind of platform, assuming they can do what they want to do, right? Just like you're saying, Alec, everybody, all the foot traffic. I mean, that's all of America. Starbucks. I mean, I've been to the Great Wall of China, and when I was there, they had a Starbucks inside one of the little tourist locations.
There are more.
That was at the it's right near the Great Wall is in lots of different places, but this was in Beijing, one of the old temple places.
I mean, there are more Starbucks than McDonald's, actually. Weirdly enough.
Is there?
Yep.
That makes sense. So we put crypto right at the forefront. I mean, that's going to create massive adoption. I mean, it's just another thing that we need for sure. I don't understand what they're trying to do with this. It's one day physically delivered Bitcoin contract. So it's almost like, and they keep talking about physical warehousing in this. I don't understand that at all. What the hell they're trying to do here? Talking about managing specific security and settlement requirements.
I think it's just their process of allowing Bitcoin payments, at the consumer level for these big institutions, working around, the slower transaction time and speed of Bitcoin. I mean, it seems like they had to work out some sort of system to allow for, settlement in Bitcoin, which, I mean, it's great because that's what we need right now, especially when Bitcoin's still growing and being developed. It's just the natural progression to have these sort of settlement and kind of centralized, solutions to offer consumers.
Right. I mean, that's the thing. If they're talking about warehousing, which again, I guess they're talking about clearing. I mean, it sounds like you would have to, if they're trying to facilitate between crypto and fiat, sounds like there's some sort of central account where you're going to have to basically have dollars with them. But on the regulatory side, I guess their approach is kind of to use kind of like a futures process. So I don't know. It's a lot of centralization to me. I mean, I guess that kind of leads us into the other news that we were going to talk about that the market really anchored on this week, which was why the price was going down, had to do with that OKX exchange over in Hong Kong.
Yeah. I missed the original. I was traveling the day, but they had their statement, OKX's official statement on that whole liquidation. And I don't know if you've tried to read through it, but I tried for probably 20 minutes. I don't know. It was just a bunch of just mumbo jumbo. I don't know. But if you want to explain what happened, pretty much.
Well, this is just, to me, when I hear about these quote unquote, futures trades going on, to me, it's like timeout. The only legitimate futures that I know, maybe that's because I'm not familiar what's going on with Asia as much. I mean, I'm pretty sure this is a Tokyo based or Hong Kong. It's a Hong Kong based exchange. But I mean, there's so much risk involved with futures that you got to really trade these things. And I honestly only consider CBOE, CME as anybody legitimate. So I was always skeptical that these guys were really trading futures in the correct way, and actually these exchanges are actually putting up the right amount of capital, and they knew what they're doing with the margin. But it sounds like this is a great example where anybody that's trading on this exchange must have had a centralized account with that exchange, because they're talking about, this is the firm's word. So some trader, you got way over leverage. They're talking about amounts of 418 million, right? 418 million that this guy basically lost, this one trader. And what I found it interesting too is that they identified the trader as a quote problem trader, and they only had his ID number, which was the only information they had on him.
Mm-hmm.
So first of all, you mean to tell me that you're allowing people to trade that amount of size on margin, and you don't even know who these people are? Right. And then it goes on later and says they were able to contact the client, and they basically told him, like, hey, we need you to stop trading. You need to reverse your position. He didn't listen. So then they were forced to close the account, and this guy had massive unrealized gains. But they said that I mean, I'm so
Mm-hmm.
skeptical of this exchange. They said they put 18 million in, which is 2,500 Bitcoins, into quote, an insurance fund. What the hell is an insurance fund? To help minimize the impact on clients. So that's an insurance fund, I'm assuming, that's at that exchange. So this is basically admitting that because of this one trader, this firm was going to go put all their other clients' capital at risk because they didn't have the money. So it says they had to force out other futures. It said it also forced other futures traders with unrealized gains that we to give about 18% of their profits.
Yep. Yeah, like a socialized loss system.
Yeah, that's no different than what MF Global did. I mean, they're trading with the client's money. So this is the problem with this centralized stuff that we haven't.
I
We're
mean,
going back
I
to
don't
this.
I don't even know if it's just the centralized part of that. I think it's just, I mean, it's, I don't know, compared to like the CME, it just seems kind of, almost like amateurish. I don't know enough to critique it too much, but I just, when there's like anonymous leveraging available, I don't know, when you have like these, I don't, how do you even account for like risk management when everyone's anonymously leveraging huge amounts of money?
That's
Where,
great.
if you wanted to, like, with the CME, they would never allow, like, some inexperienced, random anonymous trader to build that big of a position on leverage. It doesn't, I don't understand. And then when, that fails by that anonymous, heavily leveraged trader that should never have been allowed that sort of leverage, then they just have no choice other than to, socialize those losses. It doesn't make sense. I think anyone that trades on an exchange, pretty much any exchange outside, outside, the big ones, and the heavily regulated ones, you're gonna run into these problems. And I don't know how many times people have been warned. Everyone's freaking out that there's some sort of socialized losses, but you're trading on a heavily underregulated exchange that allows for anonymous leveraged positions. So I don't know what people expect when you're trading on exchange, but I guess you've been warned. I don't know. I don't feel too bad, I guess.
I mean, it's crazy. These guys literally. I'm just reading further into this. They this exchange made you pass a quiz on its rules before you began investing in futures. What a
Yeah,
joke.
that's their risk management right there.
You gotta pass a quiz. What is this, like a bunch of, I don't know. To me, it's like, I mean, and they literally are trying to create this thing called a clawback, where they're basically saying that if we're gonna let you trade with up to 20 times leverage, we don't have the funds to back you. We're basically just going to use all the funds from all our other clients in here. And if somebody goes rogue like this, and you're just going to take a socialized hit on all your clients' accounts. Why in the world would you ever open an account like that? I guess it just shows you the lack of
the lack of experience.
Anything to speculate on leverage, people are.
But you should read the actual OKX support, like their written response for it. Maybe you can get farther than me, but it was pretty hard to understand. It didn't seem like they took so many words to explain such a simple problem.
But really, it shouldn't. A firm like that blowing themselves up because they have bad risk management and they're lending way too much to the traders and they don't have any risk metrics, that shouldn't hurt the market. I mean, it's just that firm's blowing up. I guess you could make the case that if that's this number 2 exchange, which I think I read somewhere in there, that you got a lot of people that don't have capital to buy or bid up the price. But I think it's more of just the market takes that as a headline, like, oh, there's a bunch, there's another exchange having issues. That's negative. And
yeah, OKX is, I think, the second biggest exchange for 24, the last week of volume.
That's just total example of you got to get away from the centralized stuff. If you're going to trade futures, you got to do it with a reputable firm that, I accidentally tried to put in a bid the other day on the mobile in BTC, and I accidentally put the price in for the size.
Mm-hmm.
I wouldn't, I got a message instantly from Ameritrade. You can't. This exceeds your amount you can buy per this. They have limits on BTC. You can only buy 10 contracts.
Mm-hmm. Yeah, I can see if you're just
1,140. If that was OKX, that would have been filled.
Yeah, exactly. And you wouldn't have to put any personal information, which I think that definitely does have a place. Like I'm not bashing the anonymous leveraging. It's just, I don't know, it seems like a lot of leveraging for anonymous, but I think it has a place still because people still want to trade anonymously, and sometimes you want to put on a little bit of leverage, and I don't think your identity needs to be, everywhere, but I think there's a balance, and you have to have that risk management, on how much you're going to allow, how much of your account you're going to put on an exchange like that, and people are getting upset because they're getting burned. Some of their percentage gains, have been taken away. And just the idea that, bothers people. But I mean, that's just, it's just a give and take if you're going to use that sort of exchange.
Yeah. But that's, it's back to the basics of what leverage is. You're borrowing money. So people, forget to think, well, where does that money come from? It's coming, the exchange is either lending it to you or, there's firms behind the exchange that are committing capital. That's what most of these clearing firms do. They extend the capital to the broker or to the trader. Well, if you're going to let people trade on margin, that means somebody's on the hook for all those dollars. So if you get off sides, the position goes against you. That's why you have margin calls. And these exchanges just don't know what they're doing.
Well, they probably do know what they're doing because they're making a shit ton of money.
Well, that's what I mean.
That's the goal,
They just get out there, say, hey, you can trade on leverage, and they just want business and they just want to start executing, and then they don't have their risk metrics. So they probably haven't had the experience of, it's like you look what these ICE guys are doing, the NYSE guys, they know, they understand risk. They've been at this a long time. They're going to get the risk metrics right. I think most of these other exchanges, they just want to transact. And there's a lot of people that want to transact, but
I mean, it's a race. It's a race right now to grab up as much volume as you can, in this early stages of the, ecosystem. These guys don't want to wait. They don't want to take the time to assess, the risk management as much as someone like ICE or, NYSE would.
Yeah.
But, it's like I said, it's another give or take there. They choose to do that for a reason. They're not stupid. They see the disadvantages and advantages of doing it. It's just I think the consumer needs to be aware of that, of those trade-offs they're making, as well as what the exchange trade-offs, what they're making as an exchange,
Yeah.
and plan your, allocate accordingly, I guess.
Yeah. Well, what else did you want to talk about? Partner, the Bitcoin dominance was kind of on your mind.
Yeah, I see a few people bringing it up, and because it's reaching almost 50% again, and I know that's just by market cap,
Is
which
it really?
yeah, yeah, 50% again. It's getting there. It's like 48, 47, bouncing back and forth. But I mean, that's just by market cap, and market cap can be gamed, so damn easily.
Yeah.
But it's probably much higher. But that's what we have right now to view it, at least.
Well, I think this. I like I said, wouldn't call it a bear market because my time frame is a little bit longer term. We look at the weekly and monthly charts for our long term, time frame, and Bitcoin holding 5,000 is still long term bullish. But most people consider 2018 here when we've dropped by 60-70%, and a lot of these altcoins are down even more as a bear market. So I think this year has really repriced a lot of these altcoins. And so I think that's probably where your BTC is starting to dominate again, right?
Yeah, I mean, I see it not as much as people selling Bitcoin or altcoin for Bitcoin. I see it because Bitcoin's easily the most common way to get, the gateway, their fiat gateway into the cryptocurrency market. So I think that's you can kind of view that as the dominance heading up so high is kind of a start to people are, building those positions in Bitcoin. And then it kind of acts as a rubber band where everyone starts piling in that fiat gateway into the cryptocurrency market. That's Bitcoin. Bitcoin goes up. They see all these, theoretical dollars they have now. The Bitcoin has gone up in price. They've earned all those dollars. And, they see all these altcoins and they start spreading that profit out into all these altcoins. I think that's the cycle, I think, that we've seen for years now.
Yeah. So the question is then, I mean, can you see a chart of Bitcoin dominance? Is that on CoinMarketCap?
Yeah. No, definitely. Well, by market cap, at least.
Well, all right. I should have had this up, I guess. But if the listeners want to bear with me here, let me go over to the site and check this chart out. Because I'm just thinking that there's got to be highs on that dominance, right?
Yeah. Definitely. It's definitely a cycle there. But I mean, I think you could see another way too. I think people are just excited about Bitcoin more than anything else.
So, but does that mean alts are underpriced and they're a buy now? Because that assumes that we're not.
I don't know. I mean,
shitcoin category, but does that? To me, that tells you that alts are cheap down here. If we're back at the highs of Bitcoin dominance.
Oh, I think so. I think they're. Yeah, I mean, just from a standpoint, not as like a fundamental value of how good their team or idea is. I think just from the idea that there's going to be a flow back into altcoins from an increased Bitcoin price, which I think is, I think we both think is imminent. So no matter what you feel about these altcoins, there's going to be a flow of capital back into them.
Okay. Right. So, all right, I'm looking at this CoinMarketCap chart now, the Bitcoin dominant. Yeah. Looks like they really only have data going back to 2013. So that's fine. But I mean, yeah, Bitcoin was just clearly dominating at above 80% for 2013, 14, 15, even 2016. And then all of a sudden, 2017, huge collapse from 80% back to 40%. Went from 40% dominance and rallied back up to 62%, fell off a cliff again to 35%, bounced to 45, back down to 36, and now we're back up at, like you said, 47, 50%.
It's just, I think it's just hard to see those drop-offs because those are all just, I think when you think about it's important to think, you kind of have to discount a lot of that drop because those drops are all altcoins, these ICOs, right? So all those coins have no liquidity against fiat. There's no liquidity for it. So they can only be priced on Bitcoin. So I don't know how you can't really add that to the dominance chart if they're only paired against Bitcoin, right?
Well,
If they have no USD value, only Bitcoin value.
we got to do some more research into
Yeah.
this.
No, I know. So I was just trying to think about.
Because I mean, it looks like to me they're basically comparing Bitcoin to Ethereum, Bitcoin Cash, Litecoin, Ripple, Dash, NEM, Monero, IOTA, Neo, and then they have others at 15%. So this was basically rallies in Ethereum in 2017, and the rally that with sharp spike in Ripple and Litecoin that really did it. Doesn't even like Bitcoin Cash had a real impact in 2017. So I think if people are really paying attention to that, it has a lot to do with Ethereum, Litecoin, and then they gave Ripple a good amount of weight. I mean, it says Ripple's at 19% dominance. That doesn't seem right to me.
Oh no. By market cap, but
now it's down at 6%. 6% of whatever
still
their
a little too high.
total market cap. All right. Well, I think when you look at Ethereum and Litecoin versus BTC, those charts also are telling you the same thing, that Litecoin is really cheap or low relative to Bitcoin right now. Same thing on Ethereum. So we've actually been better buyers of Ethereum, and I've kind of held off on Litecoin until it gets some momentum again. But that makes sense. So,
I think we're still going to see Bitcoin hit like that 60% dominance by market cap at least.
It seems to be it seems to be trending, right? So that it looked like the market was comfortable with literally like a 95% dominance to the low of 77%, right? So that was your range, and it traded. I mean, I'm not exactly sure how we want to make money off of this. I'll have to think about it some more and kind of analyze this a little bit. But there was definitely a cycle, like you were saying at the beginning, Alec. I mean, it cycled from 92, back to the low end of the range towards 87. Then it bounced back up 10 percentage points. And then it came back down 10 percentage points and went back up 10 percentage points. And then it came back down again before this whole Ethereum, Litecoin, Ripple stuff happened in 2017. But now we're downtrending, and there's clearly cycling to the low end of the range would be like around 40%. And so, yeah, to your point, maybe we're cycling back up to like 60%. And then to me, that seems like at 60%, maybe BTC looks a little bit probably rich if you think about relative value. That's probably the best way to think about this dominant stuff is you're comparing the major coins versus each other. So that's really a relative value trade. So just like on the bond market, I'm looking at, okay, this particular bond duration is cheap relative to this structure. So there's a lot of relative value traders that will trade the markets like that. And I think you can do the same thing, and that's developing in crypto. So I like that. We get BTC, we keep an eye on the dominance here. We get around 40%. Seems like that's pretty low. And then right now we're kind of trending back up towards 60%, which was the highs. I'll post this chart for our group, and we'll start tracking it more.
Yeah, I think I'd be curious to see, because everyone always speculating what the real dominance is, and I think it's much higher than 40%. I think it's the majority easily. I think it's up to 80. I don't know, probably like 60 to 80% right now. Just if you take away any sort of coin that only has liquidity paired against Bitcoin.
Right. You could probably put together a better chart that would measure it instead of just market cap. You throw out, you could argue if Ripple should even be in there.
Yep. Or even listed on CoinMarketCap.
Period.
Yeah, just period.
That's good stuff. Well, that was a good show. I'll just kind of end it with, I just said we'll post this chart in our group chat. Guys, the best way to kind of follow us is go to blockedgecapital.com. That's our digital asset management firm we're building now, blockedgecapital.com. And under the education section, we've got different products there that we we've been training traders for a long time, and I did it on the institutional side, and now we're kind of working with a lot of global FX traders, futures traders, cryptocurrency traders all over the world. So we have a model in there that our institutional directional model. We've got some video on that we sell. It's 9 hours of me giving my 10 years of experience and what we put into our directional approach. But then you guys can look around on there. But the point is that there's a chat room there. It's free to join. That'll get you in the right spot. And then we have a crypto team. It's $99 a month. Guys pay to just be in there. And that's where we post stuff like this. We're kind of analyzing, trading these markets all day.
Yep. And
buddy, do you have anything else?
Yeah, just if you want to stay up to date on the episodes, the conversations, and when the next shows are happening and everything like that, just follow us on Twitter. Buy or sell WTH is the handle. So, and you can follow each of us individually, me and Jason too, from there.
Yeah, my handle's a little bit easier than yours, but it's the Jason Jenkins at the Jason Jenkins is Twitter. And then don't forget to subscribe to the YouTube, guys. We've been going live a couple times a week. So if you subscribe, notifications on, all that good stuff, then it just pops up, and we're getting a pretty good group there going.
Yeah, we should try live streaming some of these podcasts, but maybe we'll get to it eventually.
Yeah, we'll start doing that. All right, guys. Well, enjoy your weekend, and we'll catch you next week.
Yeah, until next time.